Hey traders, welcome to Charts and Coffee. Great to see everyone. Hope everyone's having a good Thursday morning. Speaking of Thursday morning, let's talk about some of the data that we have already seen. So two places I look for economic calendar events, something that I call hot zones, right? So what is a hot zone? It is a scheduled high impact, high volatility event. It's usually one that does have macroeconomic implications, which is to say, it has implications for what the Federal Reserve is going to say and do based on movement in jobs or based on movement in inflation or growth. Those are the three main pillars. So notice I didn't say headlines. Notice I didn't say earnings, right? We talk about macroeconomics. Those are the primary pillars. So those are needle movers for what we may expect to happen to rates. Why does that matter, especially this week? A lot of the movement that we saw into the Tuesday close, a lot of the movement that we saw into the Wednesday session had a lot to do with FOMC meeting minutes. And again, this is not about September. September is still largely, overwhelmingly a probable, not probable, it's actually the most probable, right? Hold. We're going to stay at that 5.25% to 5.5% rate. So no drama there for that September 20 meeting. Where is that drama unfolding? Are we going to see a quarter point hike in November or December? And did the FOMC meeting minutes change what we thought, what we were already thinking before 2 p.m. yesterday? Not really. I mean, I could say that the possibility, right? Probability is what I'm going to expect. Possibility is stuff that's sort of lurking in the corners, right? The possibility that we could see a quarter point hike is absolutely on the table, just not more so in a way than the pause. So it's there and it's prominent, but it's not the most probable. And this pushes us out to November 1 and December 13 meetings. Think about how many CPIs, PPIs, GDP, non-farm, JOLTS, PMIs. Think of all those hot zone stepping stones that we have on the path to November 1 or December 13. Lots could change by then. And believe me, if under the weight of a possible quarter point hike, the equity markets start to fall, oh yeah, Jerome and the rest of the voting members back in the halls of justice, right? The super friends, they are sitting there with Gleek, they're and the Wonder Twins, watching the equity markets saying, oh yeah, we might be breaking stonks. They will change monetary policy. Okay. So let's see what happens. This is what we know. We trade what we see. We trade what we can back up with data. And that is where the data all lands, gang. Any of the hot zones we look at, what does it do to target rate probabilities, right? Anything that any Fed member says, what does it do to target rate probabilities? If this is your decoder ring, you're going to be fine. And that's where we're going to continue to measure what's happening. That's what That's what we have this morning, gang. That's the bulk of what it is I'm looking at. So let's go ahead and jump into the questions. As always, if you have any questions, let me know what symbol you're looking at, possibly what time frame, because that is going to matter a lot. I don't use multiple time frame confirmation. We look at one time frame to set up one trade, right? How do you know you're stumbling into multiple time frame confirmation? Or better yet, what's the worst example of what almost always happens to anybody who does? You take a 5-minute setup, something I do 2 to 4 times every morning with my folks at the Sector Secrets Mastery. We're actively day trading about the first hour of the day. All right. Let's say the 5-minute doesn't start to move in the direction we want. What do multiple time frame traders typically do? Oh, but the 15 agrees. And if the 15 doesn't, but that hourly, right? Before you know it, you're justifying a day trade because the monthly chart is in an uptrend or whatever, right? So stick with what is on the time frame that you're trading. It's going to allow you to control risk a whole lot better and understand that a 5-minute psychology, say right after unemployment, is going to look very different than daily time frame. And a 1 hour can look different than them both. So ask yourself, what slice of psychology am I playing, right? Not how many time frames are agreeing with each other. If that worked, it would work. It simply doesn't. So that's why we make sure we stick with the time frame and the risk it presents. All right. So let's go ahead and tackle some questions. Hey there, Stacy. Thank you very much. Yeah, absolutely. If you start your day off with old charts and coffee, yeah, smash that like button. Much thanks. But even better, smash the like button, leave a comment, leave a question, leave a symbol. Yeah, get your questions in early. All right. So first up, can we cover the Russell? Yeah, absolutely. So let's take a look at this, Relief. If I'm going to look at the Russell. All right, first question in the morning. Thank you. Thank you. All right, Relief. This is what I'm going to look at. What is, and let's look at it from the 3 time frames that I look at. Once upon a time, gang, in a land far, far away, I used to use 1, 2, 3, 4, 5, 7 different time frames. Insanity. And I would usually opt for the time frame that was the longest, that had the best structure. Okay. Now, what we've done over the past, I'd say 10 years plus now, is we've narrowed it down to, I'm going to day trade, I'm in a 5-minute time frame, short-term swing trades, 1-hour time frame, swing trades daily, right? So I know which time frame does the job best. Pick your 3 favorite time frames. Humor me, right? Come join us in the Sector Secrets Mastery. See how we do this. It will simplify life. So Russell, let's look at it from all 3 slices of psychology. 5-minute time frame, I'm pretty bullish. Right? It's a little bit neutral. We still have 23 minutes to go before we get to the open. But right now, I'm mostly bullish. We've seen an uptrend for 2 hours. On the 1-hour chart, we've been bearish. We've seen that Wednesday and even end of Tuesday, Wednesday, and even the beginning of Thursday on the 1 hour has been a little heavy. However, we're starting to see on the very right edge of our multi-trend indicator, which is the decoder ring for market structure. Nothing does it better, gang. It's just really simple. Classic, time-tested, moving average and moving average cross. And there's a reason we still talk about this quite literally decades after, most traders learn about this early in their career, and then they abandon it. Why would we? It just works. So you can see the multi-trend is starting to show signs of coming out of the downtrend. And then finally, the daily. Let's say you're thinking, Rog, I'd like to have 2 to 10 days exposure. Oversold and neutral. Minor. Oh, this is gorgeous. Look at this. Look at the daily time frame. Wowza. 200 propulsion. Minor low signal. Now, I don't want to signal when the minor low is done. That's too late, right? A lot of traders like signals when the trade is confirmed, but a lot of times what that's going to lead you to is chasing after the bus as it's leaving the bus stop. Who's been there, right? Yeah, this reminds me of flashbacks to high school or middle school. Okay, I don't want to be chasing the bus. So what we want to do is have that heads up that a minor low is forming, and it is right near the 200 propulsion in an oversold neutral environment. Yahtzee. Right now, let's say you're thinking, Rob, I don't trade futures. I trade the same idea, but I want to use the IWM. Keep an eye on this, because whatever's happening on the RTY futures is going to play out in the IWM. And by the way, that's absolutely one of the main things that we emphasize in the Sector Secrets Mastery, which is however you want to trade the Russell. It could be IWM, it could be the shares, it could be the options, it could be the RTY futures, it could be the micro Russell futures, right? So you really have 3 different ways, and 4 if you go take a look at the heaviest weighted sector. So KRE is sometimes a proxy, sometimes a relative outperformer, but if you can master this understanding of the connective thread from index, sector to stock, you're in really good shape to say, all right, I'm not just going to find my favorite stocks and my favorite secret squiggle setup. I'm going to go find it in a symbol that has the highest likelihood of follow through. So that's the Russell. And I hope that makes sense. And I hope that's something that, frankly, you might be able to put to work on that one. Relief, you might be able to put that one to work today. So I definitely keep an eye on that IWM. All right, Zen 25 from our Essentials room. Can I also cover one of the mega caps texts, Microsoft or Apple. You know what? I'll cover them both for you. So let's start off. Well, index sector stock, right, Zen? So let's go through this process together. All right, let's start with the NASDAQ. Oversold, neutral environment. Very, very important candle we have here. Look at that green arrow at the bottom of the daily time frame, which is the chart all the way to the right. That is the signal for the pattern's formation. I don't want to know after something's happened. I want to know during, right? That's the difference between traders who want a signal and that they'll blindly follow, which I do not recommend, versus, hey, it's time to keep an eye on this, right? And so there's the first cue, oversold stochastic. So I know that the NASDAQ could be at a turning point, right? There could be some hearts and minds changing and whether or not there could be some support. Then let's go to, as it pertains to Apple and Microsoft, the sector that they both dominate. XLK, the tech sector, something we talk about a lot in the top tier outlook. So for those of you that have not checked out that newsletter, the top tier outlook, it's actually included with the Sector Secrets Mastery membership, or you can subscribe separately. But XLK has been absolutely something we've been focusing on a lot because of the way in which Apple drug it lower. So the first thing that we've been saying for a while is if you're looking for follow through, don't look for it in Apple. Don't look for it in XLK. In fact, Apple and XLK are half the reason the NASDAQ's spinning its wheels in the mud. So what we've been doing instead, Zen, is saying, well, if this is sort of a do not watch or watch later type symbol, Microsoft and Apple kind of get painted with the same brush. Do you see how they're both struggling? See how they're both having a hard time? Let me show you something else. Look at Amazon. Hard to believe this is in tech too. Look at the green. Look at the structure, right? Even though it is pulling back, it's pulling back in the context of an uptrend. Look at Meta, right? Okay, it's struggling a little bit at the moment. So would I consider Meta? No, but let's look at its friend Google, right? Okay, may not be pretty, but from a relative performance standpoint, it's hanging in there. So this is where I say if Apple's dragging down the Microsoft and the XLK, then let's let that figure out what it wants to do. And for now, my advice is rather than saying, hey, let's set it up, which let's face it, it could be something we could set up, but I'd leave it alone for now. If the NASDAQ can start climbing, it might get Apple out of its own way. But Apple has yet, since the gap and the subsequent sell-off, it has yet to find a floor that it can start to bounce from. So what I would say for now is leave it alone. Don't bottom pick. We don't get brownie points for having found the bottom. What we get brownie points for is follow through, right? So I would say there's a lot of other places, XLC, XLY, healthcare, financials, that we could see follow through. And that's very much at the heart of trading. You know, think of it this way, gang. If you've never thought of it before, ask yourself, you know, Pareto principle applies to us all. Yeah. 80% of my time is done doing what we do here in Charts and Coffee. Trade this, not that. All right. 20% is actually waiting for price to get to my trigger, right? So think about right now, I think most traders, especially traders who are struggling, spend all of their time trading and very little time asking, why am I trading that symbol? Or why am I trading this particular strategy for this particular? They've asked very little. In fact, probably don't at all, right? So if you would flip that around, that's very much the ethos in the mastery. We spend a lot of time figuring out what to trade. And think about it, those of you that are builders, you know, measure twice, cut once, right? What do most traders do? Cut twice, maybe don't measure at all, right? So think about what is upstream from the challenges you're having at trading at the moment in a month like August. And chances are it's not going to be strategy or secret squiggle selection. It's going to be symbol selection, okay? All right. So let's go ahead, since I'm talking about relative outperformers, let's go take a peek at what's going on in Johnson & Johnson and frankly, why I like it so much. Look at Johnson & Johnson holding the daily price movement ranges, which I know a lot of you in the Sector Secrets Mastery Trial right now have, right? For that month, we're going to see those volatility support and resistance levels. There we go. So this is one of the things that I want to view as a level of support. Now, most folks don't know that you can look at historical volatility and plot that on a screen for support or resistance. They've never curated the data. They've never tested it. This is something that we've been using and testing for well over a decade. So it's stood the test of time through all sorts of market behavior. And the fact of the matter is, there are historical volatility patterns. So take a look at how Johnson & Johnson's behaving. It's most definitely, it and Lilly are absolutely relative outperformers in healthcare. So index sector stock, right? So we definitely like this corner of the market. Healthcare has come on pretty strong. Financials benefited in the Q2 to Q3, and then later now into Q2, healthcare is coming along. Regional banks have been doing pretty darn well up until recently, but this doesn't mean it's untradeable, right? The movement as of late, it just means we're waiting for a setup, which frankly we still are on the daily. On the 1 hour and the 5 minute, remember, short-term time frames allow me, well, frankly, more opportunities to get in and out, and they allow me to take advantage of psychology that may not be available on the daily. So the daily has not given me a short sell, but KRE has given us a short selling environment since Monday. So that's where each time frame, when used individually, is going to give you such a tremendous edge. So that's definitely something that I would keep an eye on with that RTY and with the relative performance and how, again, you look at the Dow relative performance. Well, what's going to benefit if the Dow's strong? Healthcare and financials, maybe transports, maybe industrials, but not really tech, not really communications, not really consumer discretionary, maybe consumer staples, right? And then that leads us to names like Procter and Gamble, Walmart, right? Things like that. All right, let's see. Next question. Alex asks, do many pro traders use top-down index sector stock analysis? I'll tell you what, Alex, I have no idea. So the word professional, and I totally get where you're going, but professional and trading means something very different. Like if we say someone's a professional football player, they're playing for the NFL, right? But when we talk about professional traders, that's actually more along the lines of someone who is considered to be working within a brokerage or something within the industry. It doesn't actually indicate any rate of success, right? It's actually a more of a professional. You have to pay more for data, right? You've got more eyes on you because you're within the industry. So it's really just an industry term for someone in the industry. I'm not a professional trader, right? In that regard. So I think I'm just mentioning that. So I have no idea in the true meaning of what pro means. I'm a full-time trader, right? So my primary goal is to get into trades, manage risk, and make money and pay my power bill, right? That's the way I look at it. But I have no idea, Alex, 'cause I'll tell you what, I really don't know. And frankly, don't care what other traders are doing. Never have, never will. Because we've got to remember, can you imagine being a ball player? And the guy in front of you has a style, a certain kind of bat, a certain stance, and you're thinking, well, if I adopt those, I'll be a successful ball player. We know that's not the case. We have to find our own style, right? So, yeah, I know what you mean. So, yeah, I have no idea, Alex, and frankly, don't care, never have. I use my tools in the way that works for me, and that's what I share in the room. But does it make sense? Well, I'm glad you do. So, Alex, here's what matters. If it works for you, never worry about what someone else is doing. Please, 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 never worry about what someone else is doing. In fact, I'm going to take it one step further. Most traders lose money. Why would I want to do anything like anybody else, right? So that's where I think we think about, does this work for me? Does this communicate for me? Yeah? Okay, cool. All right. Next up, for my day trading, how far do I go with expiration when selecting an option? Oh, T-Boy, such a great question. So right now, just a little hint, and keep August. Oh my gosh, keep August 30th, right? Pencil in a date for us. Keep August 30th open. Right now, I'm working up a slide deck on day trading specifically because day trading's working. The macroeconomic environment is very tricky right now. Short-term time frames, short-term time horizons are some of the best ways to find consistently 2 to 4 opportunities every morning. and find the follow through we need in a very confused. I saw a headline this morning on one of my emails that the market is drunk and confused. What a better time. I forgot who wrote it, but it was an email in my inbox this morning. What a better time to focus on short-term time frames. So yeah, let's talk about day trading a moment. And again, pencil in August 30th. We're going to deep dive some day trading that we're doing in the mastery. Use as little time as possible, T-Boy, because you're not looking to take the trade overnight. So when you look at the option chain, right? So when we talk on the 30th, I'll get into more details about open interest and stuff. But right now, T-Boy, you'll notice you have zero dated options for many, many symbols, most of the indices, right? And then you have Friday dated options. That's pretty much where you're going to be. Yeah. So you don't want to pay for more time than needed, but you also want to make sure you've got the adequate liquidity at the strike. Okay, gang? So that is a great question and so on point. All right, gang, got to go. I will see you all tomorrow, same time, same station. Be good to each other.